Hello and welcome to The Property Show. I'm Andrew Montlake and with me is my co-host Louisa Fletcher.
We're here to talk about all things property. So whether you're staying put, buying, selling, renting or letting,
we'll be chatting through the latest news on the housing market and mortgages, as well as sharing our advice and expertise to help you get the best from your home. In today's show, Lou will be looking at what's next for the property market now that the stamp duty holiday is over.
Plus, Monty will be talking about some of the surprising things that can negatively impact your credit rating and what you can do to improve your score, as well as sharing his pick of the latest mortgage products. We're here to help you make money, save money, and most importantly of all, protect yourself, regardless of where you are on your home ownership journey.
You good to go, Lou?
Like Gareth Southgate's lucky waistcoat, Monty.
Hello!
Hello!
Hello! Gareth Southgate's lucky waistcoat. You got in early with an England, analogy.
Yeah.
Does
he still wear it?
I'm blooming nervous.
Does he still wear it?
He's not wearing it this time.
Why?
He's moved on. He's a fashion setter, isn't he?
Well,
He's gone on to the next thing.
Yeah, very dapper chap. Very dapper.
Yeah, he's dapper. And we're recording this on the Saturday, and the final is tomorrow. So by the time you listen to this, we'll either be champions and we'll all be tired from a massive week-long celebration, or we won't be champions. But either way, it's unbelievable. It's so exciting to see the football fever has gripped the nation.
Yeah, and it's kind of nice, right? It's kind of like, we all
kind of something. Nice. It's unbelievable. I don't mind admitting that when the final whistle went in the semi-final, I cried like a baby.
Did you get a bit emotional?
I did get very emotional. I never thought it would happen in my lifetime. It's fantastic.
Yeah. Well, I did say this last time, but I've got Danish relatives. So
I know.
Yeah, so there was a slight conflict in the household. But I didn't wear my SC Copenhagen shirt, and I was very good.
Look, we good. Like the Danes.
They're lovely people.
I've always had a good affinity with the Danes. When I went travelling, I met a number of Danes. They're all such great people, such fun. They've been brilliant. They've been brilliant throughout the whole tournament. But I just hope it is our time for once.
Well, stranger things have happened. That
they have.
And if I sound like I'm being negative, I'm not. I'm just being, pragmatic. See, I look at data for a living, right? So it's kind of like.
Tell you what. Yeah.
But here's the thing.
The data tells me.
that
it's coming home. I'm not going to say that. I promise I wouldn't say that.
You're not allowed to say that again for the entire duration of this podcast.
No,
but there is actually something interesting I picked up on. And this is not the result of just one conversation. This is the result of many conversations I've had over the last
Go on then. Is it going to link sporting events and housing?
It is. and apparently, according to quite a few agents I've spoken to in the last 10 days or so, they say, and this is anecdotal, but that especially the ones that have been doing it for a long time, a couple of decades, they believe that there is a direct correlation between when England does really well in a sporting tournament and feel-good factor, and how that translates into movements in people thinking, do you know what, I feel really good. Okay, I'll put, I will, if they were thinking about moving, it might encourage them to kind of get on with it, kind of thing.
Yeah.
So
I guess we saw that, didn't we, in sort of 2012 in the Olympics? And
yes. Yeah, God, that feels like such a long time ago, doesn't it?
It was such a long time ago.
But yeah, so apparently because it contributes to overall sort of nation feel-good factor, that it's one of those weird things that you can't kind of legislate for.
Yeah. Yeah. So you're basically saying that if England do win tomorrow, the housing market could stay busy for a few more weeks.
Yeah, I guess.
There you go. You heard it here first.
There you go.
So
Not
if they lose,
supported
do we
by the
go into the
data.
doldrums?
No, well,
I don't
no,
buy that.
I don't think it's an exact science,
No,
Monty. But
it's not.
but I just think if people are kind of in the mindset to move anyway, and then we win, then they're going to feel quite good about life. So yeah,
There you go.
Yeah.
Which brings us nicely onto one of our big topics for today, which is what is the direction of travel for the housing market now that the stamp duty holiday is over, or part of the stamp duty holiday?
Well, yes, because it is only part. And I think this is the thing that's kind of sort of almost been forgotten in all of the excitement, is that we do have a couple of months' worth of taper relief on stamp duty. And that is actually quite important because where this now sits is that the first £250,000 of your purchase is exempt from paying stamp duty. In the vast majority of cases, there's a couple of very technical, small cohorts that still might pay stamp, but I'm not going to worry about that now. About 90% of people won't pay stamp duty.
Yeah.
And that's a saving of £2,500. But the really interesting thing here is that if you look at last year, so 2020, approximately 45% of all residential properties that were sold last year were valued at £250,000 or less.
Wow.
So although it doesn't sound like a big tax break overall, or at least not as big as the one that we've just had, it will still benefit a large number of people who are still yet to move. So when you look at it in that context, there's actually still quite a lot of life left in it. And it's my view is looking at what's going on now and looking at all the figures and numbers and everything that I see. I think where we are at the moment is likely to continue for a good 2 or 3 months yet. And that's simply, based on the fact there still isn't enough property available to meet demand at pretty much all price points.
Yeah.
And that kind of, it leads to this kind of cyclical issue, which is if you're thinking about moving home, let's face it, the first thing you're going to do is probably go online, go onto a property search website and see what's available. And if there isn't much available, then the logical conclusion will be, well, there isn't anything really I want to buy. So if there's nothing I want to buy, what's the point in selling?
Yeah.
And this is what we've seen over the past few months. So a lack of homes available to purchase kind of perpetuates. So until such times as more sellers come to the market in numbers, and therefore there is more stock available, then it's likely we're going to continue to see this seller's market, asking prices being met, competitive bidding for, the properties that are more popular, which is kind of where we've been for the last 2 or 3 months.
Yeah, prices are still high. Actually, while I was waiting for you, I was doing some property pawning on my just for the hell of it. I'm not looking to move, but it's just interesting.
Yeah.
And so I was on the market looking at some of the stuff there, and the prices still seem very high, and I think a lot of people expecting stamp duty's over, prices are going to fall. They're going to be disappointed, aren't they?
I think we're still at that point where sellers can command the price that they're looking for. You could kind of suggest that where we had seen over sort of April, May and some of June, there was such a number of buyers bidding for each property that things were going to sealed bids and stuff. I'm hearing now that kind of calmed down a bit towards the end of June when everybody went, okay, well, we're not going to make the stamp duty holiday, so take foot off the gas a bit. But I still think that there isn't the leverage there that a lot of buyers would like to have. And I think as you know, and as we spoke about last time, my other half and I, we're currently looking.
Yeah.
And we've got nothing to sell because we've sold, so we're proceedable in estate agency speak. And in a normal market, that gets you a long way up the pecking
absolutely.
order and stuff. But we're finding that, so many other people are in the same boat, that actually it doesn't give you an advantage. And that's even just to kind of, get your foot in the door. So in terms of actually bargaining power, there isn't much of that going around at the moment.
Yeah. And also it also comes down to the point that I think a lot of people have missed, that the stamp duty holiday is not the sole cause
Absolutely
of this extra
agree with you.
demand.
Absolutely agree with you.
It's part of it, and it's fueled the fire, so to speak. But the fire was already there. There's not enough properties. People do still want to move for all the life reasons that people usually want to move. Plus, you got the pandemic, and now people want to move not only for the existing reasons, but for a whole new set of reasons that we've covered before in terms of moving outside space, work, home office, etc. So I think activity, and certainly we've seen inquiry levels stay relatively high. In fact, they are high. I think last month actually was the biggest month we've had for inquiries.
Wow.
This year, which is extraordinary, really, and sort of counterintuitive, but it shows that people still want, their demand for property is still there, and we just need more available stock.
Yes, and I think there are two other. If you think of a perfect storm of low mortgage rates, you tell me, but they've got to be approaching the lowest on record. I'm going to guess somewhere
it's
near.
Extraordinary. Yeah.
So somewhere near to, plus the whole, as you rightly say, the stamp duty was there, but then this has all been exacerbated by, the race for space, as it's now being called. So this is, people deciding they don't want to be in London because of pandemic, blah, 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 blah. So there's all of that. But there is this other thing that we've all forgotten about, because it's kind of history now, which is that there was a build-up and a backlog of people who didn't move in 2019 due to that little thing called a general election and Brexit. And they kind of waited and waited. So again, kind of cast your mind back. It feels like a different universe. But December 2019 was one of the busiest Christmases for agents, because we'd had a general election. There was now, whichever way you vote, there was now political certainty. We knew where Brexit was going.
Yeah.
And that meant that people who had previously said, well, I'm going to wait and see, were now coming back to the market. And that's why we started, January, February last year flying, because we had this pent-up demand, 12, 18 months worth of pent-up demand that was now, buyers and sellers coming to market. And then, of course, that all got parked. So actually, this isn't just backlog from people who were unable to move in the course of 21 and 20, the year so far and last year. It goes back further than that, and I think that it's just, an exceptional occurrence that all of those things have overlaid at one point in time.
Yeah, that's very interesting. So it's likely to continue. And regionally, is it going to be different in different areas of the country? Or
so I've been speaking to agents all around the country, for a piece of research that I've been working on recently, and it would appear that the usual suspects, so the coastal areas, the southwest, so Cornwall, Devon, Somerset, the Dorset coast, and then thinking about, going into the east to the beautiful Norfolk Broads, that coastline of the east of England, all of these areas, they're seeing an influx of people now who are, they are, now the other thing, of course, layering into this is that a lot of companies are now at the point where, they've basically assessed their back to work strategy, and quite a lot, not all, but quite a lot of companies are saying, well, we're going to maintain where we are at least for the rest of this year. If not, we're now kind of building flexible working into the, hardwiring it as part of our business strategy, if you will.
Yeah.
So I think that certainty, again, is meaning that people who had perhaps held off until now, who are living in London and the southeast, have now had the green light from an employer to say, yeah, you only need to come in once or twice a month, providing you can do your job from home. And those are the movers who are now going, right, I've always wanted to live by the coast, or I've got family in Scotland, or we can get more bang for our buck if we move to
Yeah.
the east, and that movement is still happening.
Yeah.
And certainly speaking to the agents that I have done over the last 10 days, they're reflecting conditions that I would suggest we last saw in London in 2006. So
Very
what they're
interesting.
talking about, I can map to the market at its peak in that sort of late 2006, early 2007. And that's happening in some areas of like Devon and Cornwall. So, yeah, it's all relative,
Very
I guess.
interesting.
But, yeah.
Well,
Yeah.
very interesting. And no doubt you will keep your beady eyes on it.
I will be. Yes.
And let everyone know what changes are occurring.
Yeah. It's going to be an interesting few months. Good luck getting a conveyancer, by the way, for the next few weeks, because they are all on a much needed holiday.
Yes. And actually, do you know what? On that note, well done.
Yeah. Well done.
To mortgage lenders, mortgage brokers,
Yeah.
conveyancers, valuers.
Yeah.
There's so many. I've not heard yet of lots of wholesale people missing the deadline. There are a few, but not as many as we feared. And actually, everyone did a damn fine job.
Yeah. Well done to the
get through
industry.
that. So
Well done, everybody.
hats off, industry.
Yes. Yes. Well done.
Just a reminder, you're listening to The Property Show with Andrew Montlake, that's me, and my co-host Louisa Fletcher.
That's me. So, Monty, one of those big subjects that we sort of chat about amongst ourselves but haven't really spoken about in detail on the podcast yet is credit ratings, credit scores.
Oh, yeah.
The old credit score. And it's one of those things that it's not really important until it's important, if you know what I mean.
Yeah. It's always important, though, Lou.
Well, yeah. Yeah, it is. You're not wrong.
But you don't notice
it. But you don't notice
until it's important.
Until it's important. Yeah. Yes. So, for those people who are sat there thinking, "Well, I'm not moving home, for a very long time. Why do I need to pay attention to my credit score? How could that impact me when I remortgage?" I thought it might be interesting to talk about that, because it isn't just people who are moving home that this is important to.
No, absolutely. Well, so, I mean, it's everyone, really.
So talk me through, why are credit scores such a big deal?
So credit scores are a really useful guide and tool for lenders, and not just mortgage lenders, anyone who's giving you either a credit card, a personal loan, a mobile phone, any type of credit. They will look at your credit score, and it basically gives them an indication of whether you are creditworthy or not. So all lenders of any type want to make sure that they're lending money to someone who is highly likely to pay it back.
That makes sense. Okay. Yeah, get it. Okay.
And a credit score, I'm trying to think of the word. Collates. There's another word for collates. Anyway, but basically it collates all the information financially that is out there on you. And so it will detail every loan you have, every credit card you have, every bank account you've had, every mortgage you've had, where you live, where your bank account is, etc. It collates it all into one place, so anyone looking at it can see whether you are a good prospect or potentially more of a questionable prospect to lend money to. So if you've ever had a missed payment or anything like that, it can be found usually on your credit score, especially if it's happened within the last 6 or 7 years.
See, I think that will surprise a lot of people, because I think only because of chatting to people both at work and outside of work, I think people tend to believe that their credit score is a snapshot rather than the detailed analysis that you've just explained that it is. And they don't really understand that there's stuff that affects your credit score which isn't just you forgot to pay your mobile phone bill for a couple of months 4 years ago. There are other things that affect credit scores, right?
Yeah, there are loads of different things, and it's important to also say that where lenders are concerned, there's a difference between credit searching and credit scoring. So when all this information is amalgamated, most of the main credit agencies will give you a score. So some go up to 999, for example. I think others are something bizarre like 730, dependent on which one. But if you've got a 999 credit score, you're A1. And then it reduces for different reasons. And that can be that you've missed a payment. It can be that actually you've got something called a county court judgment because you haven't paid for a while and something is registered against you. Usually they're done by mobile phone companies because people have made late payments, and they're buggers, mobile phone companies. Can I say that?
Really? Yeah, I think you can. It's not a swear word. It's fine.
It's not really. So yeah, I saw some research saying that last year, certainly the year before, there were 1.1, 1.2 million CCJs, county court judgments, issued against people.
Wow.
And the vast majority of them were for little things that people overlook that they don't think's important, like, oh, I'm a bit late on my mobile phone bill or something like that.
Wow.
And those types of providers are very quick to put a mark against you on your credit reports. So there are lenders who credit score, so they will take all that information and they'll assign a score to all that information. But there are also other lenders who will just search. So they won't score. They won't worry about whether you get a specific score or not, but they're just looking for the really serious things. So if you do have a CCJ, or if you do have, you haven't paid a loan back, or if you're consistently late on payments, that's what they're searching for. And there's a real subtle difference. So if you do have a low credit score, that doesn't necessarily mean that you won't be able to get a mortgage.
Well, you see, and this is the thing, because actually one of my hairdressers said this, and she said, I don't understand. She said, I've done my credit score thing, because I told her about, you're applying for a mortgage, so I'm sat there, you can imagine, with the hair foils and everything else, and giving like, you should do this, you should do that. And she said, I did that thing, I checked my credit score. I said, oh, that's really good. And she said, it was quite low. I said, oh, okay. She said, the thing is, she said, I don't have a credit card, and I've never had a bank loan, and I don't have car finance. So she couldn't understand why her credit score was so low.
Yeah, well, this is the other interesting point around credit scoring, that it's not just, as you said, it's not just about missing payments that can lead to a low credit score. There's some really simple things, like being on the electoral roll where you live. So that's a really big tick, because it means that you can be found at your address. You're linked where you live. That's a really good thing. If you've never had any credit at all, then you haven't got a credit score, or you're likely to have a low credit score.
Yeah.
So that can also be quite an issue. So one of the things we actually tell people in that situation is, do you know what? Get a credit card. Use it sparingly. Make sure, and this is the important point, make sure you set up a direct debit to pay off the whole amount each month, and just use it on bits and pieces throughout the month, knowing it'll be paid back at the end of the month, and then use it the next month. And then that builds up a good credit score, because they can see that you've effectively borrowed money on your credit card and you paid it back every month on time.
Yeah.
And so that over time builds up a better credit rating. There can also be a whole wealth of other issues as well. Fraud is a big one.
Yes.
A lot of people, when they go to get a mortgage, that's the first time they look at their credit score. And if you look at a credit report, it could be that you'll see some unexplained things on there, and someone has actually stolen your identity. And it's incredible how many times that happens and people don't know about it. And that's why I keep saying, actually, it's really good to keep checking your credit report at least annually. If you're financially linked to someone else, but you're now separated, or you've got nothing to do with them, their credit rating could still be affecting yours if you haven't delinked yourself.
That's interesting.
So that's another little thing. So there's a whole raft of little things that can affect your credit score, and it's really important to keep tabs on it.
And one other thing, and I honestly don't know the answer to this. So I don't know if it falls under credit score or mortgage affordability assessment. But something I've noticed much more prevalent over the last 18 months are, you go on to, you buy clothes or, whatever it is, homewares and stuff, and you can opt to pay on 3 easy pay payments. And there are various schemes. I won't name them because I don't think we're allowed to do that. But they're ones that everybody would have heard of. So you can basically go, yes, I want to pay, my debit credit card, or no, I'd like to take 3 easy pay payments. And I've always understood that mortgage lenders don't think that this is such a cool idea. But is that linked to your credit score, Monty, or is that linked to when you apply for a mortgage, they look at, your general spending patterns?
It'll come up again because if you're not paying it straight away, in effect, you're borrowing credit. You're taking credit. You're buying it on credit. So more than likely, it will add something to your credit score. And if you've got lots and lots of different things going on, so for example, you might have 5 of those buy now, pay later, or you're spreading the cost, plus you've got 3 or 4 credit cards, plus you've got a bank loan, then that's where sometimes the complications occur. So I would probably avoid them if you're going to be in the process of applying for a mortgage in the short term. And it's just good management. Make sure that your credit search is okay. Make sure you've got a decent credit score. If you haven't, it's not the end of the world. Don't panic. Definitely speak to a mortgage broker, an expert who can talk you through it and actually find out which lenders will be okay to lend to you, or which lenders will just credit search rather than credit score.
Yeah.
And it can be as simple as that. And that doesn't necessarily mean that you're going to pay a vastly more expensive rate. If you've got more serious issues, then again, there are specialist lenders out there and specialist brokers who can help you. And it might be the case of actually how they can work together to actually delay buying just now, but actually work to improve your credit score over the next 6 or 12 months. But I would definitely say if you just never looked at your credit report before, it's definitely worthwhile doing so, because having a decent credit score can help you in all walks of your financial life.
And it's free now, right? Pretty much, I think.
There are quite a few that are free.
Yeah.
If you want to check it regularly, then there are some you can sign up for, and it's about either £5 or £10 a month. But if you just want a couple of one-off checks, then there are quite a few places out there now that you can check your report for free.
And well, it is really well worth doing. And and as we said at the very beginning, it's not important until it's important, and then it becomes an issue. So this is one of those things that it just pays to be on top of. Not just as a one-off, but on a regular basis.
Absolutely. Just a reminder, you're listening to The Property Show with Monty and Lou.
So, Monty, it's the clock is now counting down to kick off for tomorrow.
Yeah.
But we just have time to squeeze in those mortgage picks that I know you've got sat on the sidelines.
Crazy rates.
Yeah, crazy rates. Have the rates got any more crazy in the last 2 weeks?
They're crazy. If I was allowed to swear, I would swear at how crazy they are.
Shut the front door.
Yeah, shut the front door, indeed, and take about HSBC, because HSBC have gone crackers. So and they're a great lender.
They really are, aren't they? Very nice.
They have just released a 2-year fix at 0.94%.
What?
Yeah, which is So, yeah, 0.94 is now the lowest 2-year fix.
Wow.
They also have a 3-year fix at 1.09.
Wow.
Yeah.
Wow. And this is this kind of for somebody who's got a larger deposit or more equity
Large
if they're
deposit, yes.
remortgaging?
So 40% equity or deposit.
Okay.
TSB have got 5-year fix at 1.09. 5 years.
No.
It's
I mean,
crazy.
that's just mad.
Yeah. So if you've got 25% deposit, you can still get rates at, Leeds Building Society have got 1.07% 2-year fix.
Wow.
So yeah, it's crazy. And 90% rates, if you've only got 10% deposit, they've continued to ease down a little bit. So you can now get 5-year fixed rate with HSBC under 3%.
Wow. Okay, that's the first time we've talked about
2.99%.
under 3% on a 10% deposit for a while. So
that's for a 5-year fix.
Yeah.
Wow. There are now 190 products for 95% loan to values.
Gosh.
So you can get rates from 3.39 with digital mortgages from Atom Bank. So it's just, I mean, everywhere I look, I was actually quoting a client on rates the other day, and I was going through and shaking my head, going, these are mad. It's crazy. I can't, I'm just waiting to see if we'll ever see a 5-year fix under 1%. Which that would be ridiculous.
Do you think, in the couple of minutes we've got left, do you think that this is going to continue? Because rates have fallen pretty consistently since the beginning of the year. So is this lenders competing for business?
Yeah, I think this is. I think this is competitive pressure. And I think we're going to see low interest rates for the remainder of the year. There's a lot of talk, and I won't get into this now, about potential inflation.
Yeah, that's a chat for next time. As
the economy comes back, and then maybe that will change things. But actually, I look at the cost of money and the cost of funds on the markets, and there's no real upward movement at the moment. Things are low, and they're going to continue to be low for the foreseeable future. Lenders have money, cheap money to lend, and they want to get it out the door and lend it. So it's extraordinary that we're seeing these rates, but I can't see them changing and going massively upwards anytime soon.
Wow. Well, and on that bombshell,
there you go. We're out of time.
Yep.
Are you rushing off and seeing any more properties, or
not today?
I've done.
I'm
your
just
gin cabinet.
The latter rather than the former, Monty. Yeah.
Very good.
Yeah, I'll bring you up to date on the house moving traumas next time.
Yeah. Absolutely, I'll be interested. You'll find something, don't you worry.
Yeah, I'm sure it'll all be fine. Yeah.
Right, thank you very much, everyone, for listening. If you're listening and England have lost, don't worry. We have a great group of players. The future looks bright. If you're listening and we've won, then we'll probably be dancing in the streets, celebrating for the rest of the year, because that is amazing. So thank you, everyone. If you do like what you're hear, please give us a rating or leave us a review in your podcast app.
And don't forget, we're here to help with your property problems and mortgage dilemmas, and not just chat about the football. So if you would like our advice, why not drop us an email to hello@theproperty-show.co.uk.
And if you want the very latest on the property market from the two of us, please give us a follow on social media. You'll find us on Twitter @thepropertyshow pod.
Thanks for joining us. See you next time.